Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at a 15-year chart, i.e. from the start of Bitcoin, which seems to be signaling a break above the 73,000 within the next 20 days. We'll also be having a look at the patterns that have been developing over the last 6 or 7 months of the consolidation of Bitcoin to give us some guidance of which way Bitcoin should break. And of course, as per usual, we'll have a look at the 60-day cycle as well as the wider markets and to see exactly where Bitcoin could be going in the next few days and weeks. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so I'm going to start off with the theme of this video, which is asking the question, when will Bitcoin break out of this neckline here at 73,800? So since March this year, we've been consolidating in this range from 73 all the way down to 49. And the big question on everybody's mind is, firstly, are we going to break up or down? And if you look at the previous cycles, you will see that where we are currently in this range after the red line here, the halving, if you go back to all the previous cycles, this is exactly where we are. This was the first cycle. This was the second cycle. It broke to the upside just like here. Third cycle broke to the upside. So we can expect with a higher degree of probability that we're going to break to the upside. So that's the first question. And the second question is, when will we break at this neckline here? And of course, this is the question that's the most regular question so far, because this consolidation is really testing people's patience and nerves and anxiety. And of course, nobody's got a crystal ball to tell you exactly when that will happen. However, what we've got is the charts which give us an indication of what's happened in the past. And if we extrapolate that information, we can deduce with a good degree of probability and predictability of when something may likely occur. So let's have a look at that cycle by cycle, and we'll get a very good idea of when we'll break the 73,800 back at the beginning of this year. Okay, I'm going to start off from the first cycle here and give us some sort of a clue as to when we should be breaking above the 73,800. So in this first cycle back in 2012, before the halving, we made this particular high. So this was the neckline at that point. And then after the halving, what we can do is to measure at precisely what period, i.e. the number of days it took for us to break from the halving to the break of the previous high before the halving here. So what we're going to do is measure from the halving how many days it took to break above the high before the halving here. So this is the candle, as you can see, above the green line. So if we measure from the halving to that candle, we can see clearly it was 108 days. Moving on to the second cycle, back in 2016, this was our halving, the red line. This was the peak before the halving. So if we put a line there and measure from the halving how many days it took to break that neckline. And you can see it's this candle here, and that was 169 days. Moving on to the third cycle back in 2020, so you can take this neckline here as 10,500 or just before the halving in 2020. So if we put a neckline here, the breakout from the halving to this candle where we broke up was 76 bars, i.e. 76 days. So the only way we can measure when we'll break out from the current consolidation that we have in this range here is to deduce this information from the previous cycles. So we've had 108 days in the first cycle, 169 days in the second cycle, and 76 days in the third cycle. And to get some sort of a ballpark figure of when we should break out, we can take the average of those 3 data points, which gives us exactly 117 days. So if we have a quick look closely here of where we are in that range, we should get some sort of a ballpark figure of what we can expect. Okay, here we are in the current cycle. This is our prior high before the halving at 73,800. And so far from the halving to the current daily candle here, so we're on the 23rd of September, So far we've had 152 days and we still haven't broken out. So obviously we've gone past the first cycle at 108 days. We've gone past the third cycle, which was 76 days. So in order to remain within the confinements of the 3 cycles and their range, we should get some sort of a conclusion within the next 20 days. Otherwise, this cycle once again will be a little bit different from the previous cycle. So while this doesn't give us an exact day when we will break out, the reason why this fits in very well is that just last week we've had the interest rate reduction by the Fed, and we would expect with a higher probability for that to feed into the increase in the liquidity for the markets. And obviously Bitcoin should be able to benefit from that. So this measurement tells us that we are very close to actually a breakout. It may well be that we are finally on our way in this current cycle. So if we do come back up here with the interest rates starting to reduce, and as we'll see with the wider markets, they all seem to be front running Bitcoin. They're also giving us a clue as to where Bitcoin may well be heading. So I just want to remind people, nobody has a crystal ball, but what we do have is information to deduce from the previous cycles, which gives us an idea, because many people think that we've already topped out here. And if you look at the previous cycles, that doesn't seem to make sense, as the previous cycles are saying that before the halving, the peak that we reached here, we should break that within an average of 117 days. And we've already gone past that, but we've also broken out at 169 days. And 169 days would take us to here on the 10th of October. And we all know that in October, November, December, these are some of the best months for the growth in Bitcoin price. So that seems to be fitting in. The average of the breakout between 76 days and 169 days, that seems to be fitting in. The fact that the interest rates have started to come down after 4 years, that seems to be fitting in. And the wider markets are really booming and creating more all-time highs. So it's a positive storm for Bitcoin to start to make its new all-time highs. And if we examine what the news is out there regarding digital assets like Bitcoin, we can see that they all seem to be fitting in very nicely, because we already know that there are 2 candidates in the USA elections. And we all know that the USA elections, every time after Bitcoin came out, we've had a massive rally after the USA elections. So we know that the USA elections do have some sort of an effect on the Bitcoin price. And this year, for the first time, digital assets have become an issue. And we already know that Donald Trump, one of the candidates, has already placed very strong support for Bitcoin. And what we didn't know was what the other candidate, Kamala Harris, what her views were. And what we've got here is that she's finally broken her silence on crypto. So let's have a look what her views are to give us some sort of an indication of how it could affect Bitcoin. So there's nothing negative here. It's quite clear from this that she is pledging her support for the industry while stressing consumer protections. And that's not a bad thing. So this gives Bitcoin the green light to move forward, with both candidates now pledging their support for the digital assets. And as you can see, a lot of people getting very bullish, with many people now predicting an intermediate target for Bitcoin of about $85,000. So this is what's in the news. You can all make up your own mind about what may happen. And if we have a look at the liquidation heat map, and what this does is to give us a very good, accurate range between the prices that Bitcoin is operating. So currently what we've got is 2 ranges here. The lower range is at 63,000. So we may well come back down and take out the leverage players down here at 63,000. At the same time, we're going to have this range at 65,000. So this would suggest that we may well get rejected initially anyway at 65,000. But this is a moving target, because this is based on the stop losses. And if we move on to the ETF overview to have a look at the asset inflows and outflows, so we can see quite clearly Grayscale is still bleeding from its exchange quite a number of Bitcoins. And many of those are going into their mini trust that they've created with the lower fees. So you can see they've lost about 446, but they've actually gained in the mini trust 242. So the net outflow is only about 200 there. And BlackRock seems to be taking the other supply over here. And as you can see from the other figures, the red figures are quite small compared to the green figures. So we may well be seeing some sort of a tentative turnaround of more inflows into these trusts rather than the outflows that we were getting over the last few weeks. And if we have a look at the wider markets, this is giving us a very good clue as to where the markets are heading. And if we have a look at the DXY, the US dollar, having broken out of this symmetrical triangle, we've been really going in one direction, allowing the markets to make their new all-time highs. But somewhere along the line, we are going to get some sort of a counter trend rally, whether it's going to be around here, which looks like it's now consolidating around these levels of around about 100 to 101, or we're going to have another leg down here to these levels and then make a counter trend rally. But certainly it's due, and with the current interest rate reductions that we got, the pressure for the dollar seems to be more on the downside rather than for an immediate counter trend rally. So let's see where that gets to, but certainly some very interesting developments here. Although we're consolidating, this may well be a continuation pattern to the downside. And the weakness of the dollar here is allowing the other markets now to flourish. And we can see that quite clearly with the SPX. So we've been following this, and while many people thought that this was a triple top here, the cycles seem to be playing out very well. So we made our new cycle over here, which now we can take away the question mark here. And what we've done is to move into the midpoint here on a high, and after the midpoint we've now made a new high, which means we now have a right translated cycle. So what we can expect is, after a period of some consolidation, to retest this level again one more time at 57, we should make inroads into breaking new ground into the end of the cycle, which is going to be around about the end of October. 29th of October is where the 60 days exactly will be. And then we can expect another end of cycle pull down here. But certainly the conditions are now ripe for the SPX to make much more ground going forward. Clearly, we're in an interest rate reducing environment. Therefore, until something seriously bearish occurs, we have to assume a continuation of the current bull market. And when we zoom out, we can see quite clearly where the SPX may well be heading, because we have to trust the trend until something serious is telling us otherwise. So from the end of 2022, since the start of the current bull market, the trend has been to the upside. And we can see with the 8 EMA, for the majority of the time, we've been riding this trend, the 8 EMA, all the way since then. So we've obviously had incursions all along the way here, but once we get past the pullbacks, we tend to ride the 8 EMA very nicely to the upside here. So we've just done that one more time here, and it may well be that we now ride this trend to the upside much further. So let's see what happens. Only time will tell, but the dominant trend is certainly to the upside here, which obviously augurs well for Bitcoin, which is what we're here for. So we can see that at the SPX, since the interest rate reduction, has been creating new all-time highs from there. And the question is the SPX front-running Bitcoin? And certainly it's very encouraging. So what's the story with gold? Once again, gold is making new all-time highs. We broke through this consolidation, just like we're having with Bitcoin, but gold has already front-run Bitcoin by breaking out of its consolidation here, and that was in the middle of August with this candle. So we've had a consolidation, a bull flag there, and then another run-up at the moment. So all we can see is that gold absolutely powering ahead, and you can see that on the monthly chart. We're getting another very strong green Marubozu candle. So once again, this augurs well for Bitcoin, that the chances are, the probability is that sooner or later, as we've seen with the average days where we end up breaking above the previous high to the halving, the higher likelihood is for Bitcoin to break through that 73,000. And moving on to silver, this one seems more like Bitcoin because we haven't really broken out above its previous high. But what we are doing is making higher lows along the way. So again, the trend seems to be to the upside. And once we break this triangular pattern here, once again, this is a continuation pattern. So we should really break to the upside here, making new all-time highs. So it looks quite clearly that gold is front-running silver and Bitcoin. Okay, moving on to the Bitcoin 60-day cycle, we can clearly confirm that we did have a new cycle start here on day 63. Not only did we break above the low candle here at around 56,900, but we've also gone above the previous high here and also broken this new neckline there. So we're obviously powering ahead with Bitcoin and coming to our resistance point, as we mentioned in the last few videos, with the range being at 65 to 67. This is where we're really heading, and this is what we've really got to do. When we zoom out, we can see quite clearly that the dominant trend with Bitcoin from the 73,000 over here, the dominant trend is to the downside, because what we've got is lower highs all along here. And what we've really got to do is we've got to break this particular pattern by getting above the previous high. This is the first tentative sign that we've broken out from this particular trend of the lower highs and the lower lows. Once we get above this, then we've got a very good chance of getting above the previous high here at 70,000. And as we've seen with the wider markets, they all seem to be making new all-time highs. So this gives Bitcoin a very good opportunity, and we've got quite a bit of the rest of the current cycle to go yet. So depending on how fast we move here, we could well break above the 73,000 this cycle. Although on balance, with the way Bitcoin has been behaving, very slow, very turgid, just consolidating in this range, if it continues with that type of behavior, then what we're really probably going to be getting is some sort of a move up here and then consolidating into the 60-day cycle at the higher range and then using the next cycle to move up. But certainly both scenarios are now on the table. And as we've seen with the average number of days it takes for Bitcoin after the halving to break through the previous peak before the halving, then we have a very good opportunity now in the next few weeks at least, or within the next 20 days, if we are to stay within the range of the cycles of when we break out. So we can look forward to Bitcoin breaking out, hopefully within the next 20 days. Now there is another pattern that is developing here, and it's a pattern that I've mentioned to you many times before, and that is the inverse head and shoulders that we've got. So we've got the left shoulder here from this neckline, as you can see, there's the left shoulder here. Then we made the head at this point at the low of 49,000. And this came down to 52,000. So we made the right shoulder and we're on our way to that neckline, which is what we should hopefully break very shortly. And that would suggest, again, that we should break the 65-67 range to come and retest this level. But as we've seen before, we could get an extended shoulder, as you can see here. So we may well get rejected at this level at 70 and get consolidation around this range using the 65-67 as the support, flipping it from resistance over here, and then use the next cycle to break through. But certainly with the amount of days still to go to the end of this current cycle, we still do have a very good likelihood that we could break through in this cycle rather than wait for the next cycle. And only time will tell. So we've got around about 6 weeks for Bitcoin to have some sort of a good strong move into the midpoint. And we know when we get to the midpoint, we always seem to have some sort of a pullback into the midpoint, as we can see here. If we have a look at our 4-year cycles, so the overall on-balance picture that I can see is that we're running really a normal 4-year cycle. So we had a 4-year cycle here to the top, 4-year cycle here, and a 4-year cycle over here to the 69,000. And because we came up so fast to this neckline of the previous half of 69,000 back in March 2024, and what this did was to put this on the table. This was going to be a left translated cycle. But as we've seen with the consolidation, this is now being pushed back to the normal 4-year cycle over here. So what we can expect, if this now plays out as it has done in the previous cycles, is for us to make a move between now and the end of this year to break above the 73,000, just like over here, just like over here, and just like over here. That's the big parabolic move that we should be expecting now once we break here, and a run of around about 12 months into the end of the bull market. So let's see what happens, but certainly everything seems to be pointing in one direction. And I would always urge everyone to be open, fluid and flexible. Please don't let your own personal narrative determine where you think the Bitcoin is going to go. Let the price action dictate where this price may want to go, because that will give us the best outcome of getting off at the end of the bull market here. And as you know, we have no firm commitments to any figures at this point, and we've done an analysis where we've seen the Bitcoin price could possibly go using different parameters It can go anywhere between 150,000 and 500,000. Everything is possible here. The main thing is to use the Bexit indicators that we've got. So those of you who've been following the channel will know that we've got about 6 or 7 different indicators for the end of the bull market. When we have a few of them triggering off, that should give us a very good sign that we've come to the end of the bull market. And at that point, whatever the price is here, that'll be the time to just get out. There is no point in getting fixated to a particular price. The chances are the Bitcoin price action is not going to meet your price that you've got fixated in your mind. And those of you who've been following our portfolio that we've got in the private member section with the Bitcoin miners will know that the Bitcoin miners have been decimated currently. So while Bitcoin is at 63,000, down from 73,000, so we can see quite clearly from the 73,000 to the current price at 63,500, Bitcoin is 14% down. And if we have a look at CleanSpark as representing the average of what's happened with the Bitcoin miners, we can see that we reached $24.50 here. And the current price, as you can see, is 63% down. So you can see quite clearly that the Bitcoin miners, both on the way up and on the way down, are a leverage play on Bitcoin. So whenever Bitcoin goes up by a certain amount, we can expect the Bitcoin miners to go up by 3, 4, 5 times. And similarly, on the way down, as Bitcoin's only been suffering 14% fall, the Bitcoin miners are down by around 63%, which is between 4 and 5 times down. But as they say, with every adversity, there is an opportunity. Because if you have a look at Bitcoin on the bigger picture, from the end of the bear market here at 15,400, the current price of 63,500 represents a 309% increase in the price of Bitcoin. So this has gone up by 3 times. But similarly with the Bitcoin miners, while they may well be 63% down at the moment, on the bigger picture frame, they were up by 13 times. So you can see that on the way up, there are 3 or 4 or 5 times leverage play on Bitcoin. And even after a 63% fall down to these levels, the Bitcoin miners are still outperforming Bitcoin. As you can see, CleanSpark is actually 400% up despite the 63% down. So what they're really telling us is that, so for the intelligent investor, what this is really telling us is that this here, this price action at 63% discount to the previous high is giving an incredible opportunity for the room to go to the upside. And as we've seen with Bitcoin, we are expecting with a higher probability, and please remember this is all about probabilities. No one can guarantee that this is going to go up. But judging by what we've had a look at in terms of the analysis with Bitcoin, with the dollar coming down, the interest rates coming down, the wider markets making all-time highs, the probability is that when Bitcoin goes above its 73,000 all-time high, that's going to raise all the boats, and all the Bitcoin miners are on balance with a higher degree of probability. The Bitcoin miners are going to go also to their all-time high very shortly. And just that move from where we are currently here, that would represent a 177% move. So while Bitcoin will be going from 63,000 to 74,000, many of these miners are going to be going up between 150 to 200%. So this is the opportunity that is presented with the Bitcoin miners. And those of you who've been following our portfolio will know that we started the private member section with the Bitcoin miners with a portfolio back on the 6th of January 2023. And in that period, after an initial capital of about 100,000, that grew to 434,000 by the end of 2023. And these were the results with each of those Bitcoin miners that we had in our portfolio here. And currently, because of our trading, that portfolio that we started with that amount of money of 434,000 that we'd made by the end of 2023, because we've been doing trading using a very unique trading method called the ratio trades. And as you saw with CleanSpark, while the Bitcoin miners have been down by 60, 65, 70%, our trading portfolio is only down 10%, and our target is $5 million by the end of this bull market. And from currently where we are, we would expect the Bitcoin miners to go up by at least around about 10 times. And that's based on what's happened in the past. So what did happen in the past? Well, if you take the last cycle, while Bitcoin grew from the bottom of the COVID situation here in March 2020 to the 69,000, Bitcoin grew by nearly 17 times, as you can see here. And if you were to compare that with Marathon, which was the best performer in the last cycle, from the bottom of the COVID situation in March 2020 to its high at the end of the bull market, this grew by 236 times. And of course, we don't know whether this is going to repeat here, but you can see quite clearly this was a 13x leverage on the Bitcoin growth from the same period. And if you're wondering about our ratio trades that we do with the Bitcoin miners, this is one of the safest ways to trade, whereby you never actually stop investing. So you're always invested. And what we do is we use the ratio charts between the miners to judge when one of them is going to be outperforming the other. So that way you never miss a big move with the Bitcoin miners throughout the full 4-year cycle. So you can see this is the current profit and loss. All the blue numbers are the positives here. And you can see we've done quite a lot of trades, and we have currently 2 ratio trades, which we're really at the beginning because they haven't moved yet to our targets. So they're still presenting a very good opportunity to move forward. And these ratio trades that we've got here, as you can see with the blue numbers, we only started these from the 24th of January. So we've been doing the ratio trades since only 7-8 months. So if that's something that you'd be interested in, then all you have to do is go below any of my videos. You've got the join button here, as well as the join button here in the description box. And for the price of a coffee per week, you get 2 dedicated videos which are looking at the Bitcoin miners and how they fit in with the Bitcoin cycles, as well as with the wider markets. And we also do the ratio trades whenever the opportunity arises. And we also do a market update every single day of the trading sessions. And the whole idea of the market updates, as you can see here, at the end of every trading session, the whole idea is to keep everybody moving forward along with this cycle, so we're all on the same page until we get to the end of the bull market. Okay, so we'll leave it there. I hope you found value in the video. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.